What the tariff? Oh my gosh, what is going on with our real estate market and our friends south of the border? How do you prepare for a shifting economy? Well, we're going to talk about this and more with a good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
I'm good, man. We live in some interesting times right now.
Yes. I thought last week when we said that we were at the pinnacle, the peak. Nope. The ball got pushed forward a little bit, right?
You got it. Like every day you wake up and it's like, what happened overnight? And sure enough, it's something that's never happened before, at least in our lifetime.
Yeah. And it's interesting, too. And as many of our listeners and watchers know, I moved out of the Toronto area last summer into the mountains of the West Coast. And obviously, I still have a very thriving business back there in Toronto. The interesting part to that, Dion, is I wake up, 3 hours later than all my East Coast friends and colleagues and you and the like, and there's so much news that's typically happened in those 3 hours. It's crazy.
Yeah, always. And and they've also had 3 hours time to process it.
Yeah.
And let their emotions be heard, and you're just getting a fire hydrant's worth of information at once.
That's exactly it. And neither Dion or I are economic gurus or anything like that, but we obviously we live off of the Canadian real estate market in a sense, and help people buy and navigate through that. And one of the neat things as this whole tariff thing is looming over us, Dion, and I know many Canadians are talking about this, is that just sense of Canada. Doesn't matter where you're from or what your background is, it's Canada. We're all kind of uniting around Canada, the red and white.
Well, they say, historically, the thing that brings people together is a common enemy. Now, I use those words carefully, though, because I don't think that anybody really thinks the U.S. is our enemy. But if somebody intends to do something that will harm you, your family, and mostly we're talking economically here, then it makes sense for people to get together and say, okay, what can we do to deal with the financial stress that may be in front of us with these potential tariffs? So, I know that you've been talking about something that you've been seeing.
Yeah, well, it's kind of cool too. As I mentioned, people are coming together and with this whole tariff thing is looming over us. One day it's on, the next day it's off, and then it's back on, and then it's on aluminum and steel and everything else. Outside of all that, and I know many of you've seen this, you walk into any of your big box stores, your small mom and pop stores, you'll see definitely those store owners or the employees, the workers there, basically gathering in a sense, collating, there's a word, curating, that's the word I'm looking for, all the made in Canada products. And we've all seen it. You got in the grocery store and people are checking labels and things like that and really supporting Canada-made products. And it's an interesting phenomenon. And they're now, I wish I could remember the name off the top of my head. There's a couple of apps, one in particular that's been Canadian made, and basically you just open up your app, you scan the barcode, it tells you what the origin of the country is, where that product is from and where it's made, and people are definitely buying Canada products. The other interesting thing there, and I know we've all seen it, we've gone through our shopping lines and we're queuing to cash out, and people are asking, oh, was this made in Canada? If it's not, they're leaving it on the shelf. It's really, and not necessarily, this is where we can get down that slippery slope too, Dion, is the fact that it's not made in the U.S. As long as it's not made in the U.S., people are willing to invest their money into it, and it's interesting. Yeah. And we'll see too over the next little while what that does to, the next biggest component that most people purchase outside of housing is cars, and what that's going to do to the car sales.
Yeah, so that's an interesting point, because one of my clients, Gary, who I'm speaking with tomorrow, actually, he's reached out to refinance. And generally, we're emailing back and forth, and I'm saying, okay, well, what's the purpose of the refi? Are you looking to buy another property? What's going on? He says, no, Dion, I work for Toyota here in Canada, and I'm just concerned about my job security. I don't know what's going to happen. And so what he's intending to do is just establish for himself a home equity line of credit of maybe 100 or 200,000, which will just be there in the event that his income gets hit in some way by these tariffs. And I when interest rates were starting to tick up, and we were at that point in 2022 concerned, I was telling everybody, look, maybe it's not a bad time to prepare for the worst. And there's really not much cost in preparing for the worst. And if the worst doesn't happen, all you've lost is a little bit of time, and you've prepared for for the worst. What is worse than that is not making those preparations while you can, while you're financially strong, and then potentially having issues with income, and then not being able to qualify for access to credit that you can get access to while your income source is safe. And I actually, in 2022, Gary, I did a special presentation for real estate agents, and I said, listen, guys, this year you're going to make less income than you did the last couple of years, because interest rates were just soaring and people were not buying property. And so I said to those realtors, like, now is the time to use your good historical income to qualify for mortgages so that you get those lines of credit. And some of them listened to me, and some of them didn't. But this may be another time where this is not real estate agents I'm talking to; it's anybody who feels like they may be impacted by these tariffs.
It's a good point. And we've often said, and we've probably heard it too, the best time to apply or access credit or money in a sense like this, Dion, is when you don't need it. And it's kind of
Yeah,
along
well,
the same storyline, right? Like, to help us out, help us understand why that's such a significant part of the borrowing process, if you will.
yeah, so a lender makes a decision to lend to you based on your ability to make that monthly payment. And that is determined by your historical income. But a lot of people only go to get access to that credit after they've been let go of their job. In fact, another one comes to mind, actually. I've got another client who worked in the engineering department in a chicken processing plant. Okay. And he contacted me about 2 months after he was let go. This happened just like last week, in fact. And if he had contacted me around the time he was looking like, oh, I'm going to get this package or whatever, he would have been in a position where he would have actually qualified. But now his choices are greatly diminished. He maybe along with some other Canadians too, said, Dion, I was making like $2,000 a week, and unemployment insurance, which he'd been playing into for many, many years. He thought it was going to replace his income dollar for dollar. And what he's learned, and what he's learned after the fact, is that I think it's covering about 40% of his regular income. And now he's like, Dion, I thought that I'd be getting this employment insurance. It'd pay me what I was earning while I was working. I'm struggling to make these payments now. And that's the worst position to be in, right? Which is trying to find money when you don't have income to prove to a bank that you can make those payments.
Yeah, good stuff. And are we seeing banks, I don't want to say loosen up what they're offering to clients or to borrowers, but are we seeing some products out there right now that fit that bill, if you will, for that borrower that perhaps struggling a little bit, or in your previous storyline, what type of line of credits are we looking at for that person that is at Toyota?
Yeah, so for him, he's still gainfully employed, right? So he's preparing for potentially something that might be bad in the future. He's going to be able to access lines of credit from major banks at best rates. But for the person who lost their job and is already on unemployment insurance, unfortunately, we have to go to lenders who don't care about income, which means we're dealing with secondary type lenders who will lend based on the good equity that he has in his property. But of course, interest rates are going to be higher, and there are other costs with fees. So where we can, we try to avoid that outcome. But if you're already in that situation, then we can only play the cards that you give us to play. And unfortunately, you won't have as strong as a position as the people who are already still in employment.
Yeah. All right, good stuff. Okay, last week we've talked about, obviously we talked about the market, what's going on in the Toronto market, and so forth. So let's dig a little bit deep. We're not too deep, but we're going to talk about the Toronto market. Then you had and sent out an email regarding CMHC and a survey that talked about maybe the bigger, broader Canadian market. But in Toronto, my friends, and I'm just going to share my screen here. We're seeing numbers come out of the Toronto market for the month of January, and some of it in what we've said might conflict with some of the information that's coming out for the early parts of February. But I just want you to, this is more of a generalization, and anyone can go look this up. This is just the TREB market data or the market overview, and you can go search this. Year over year transactions, we're seeing that down about almost 8%, and that's January 24 versus January 25. So sales are down, but here's where it gets really, really interesting. Year over year, the average selling price for all of the GTA not detached, for freehold homes is up, just slightly at 1.5%. It's the new listings that caught our eye, Dion. And as I scroll down and show you the new listings, you can see it's up almost at 50% of new listings. What that means is, and there's a few pieces here of the puzzle, Dion. We've had a lot of properties come up for sale in the fall that perhaps didn't sell. Now we're getting even more inventory like there is every January. New Year's resolutions, all sorts of stuff. Let's list our home, that type of thing. And we're seeing a lot of new listings. This is for freehold. The condos are almost at the same as they were last year, but we're still seeing months of inventory slightly increase, that type of thing. Now, this is where it's important, Dion, as we were talking. Talk to your local market expert. If you don't have one, Dion and I will make sure you are connected with the right person. If not us, obviously. Because what we're seeing in parts of the Toronto market is multiple offers. We talked about one of your clients missing out last week. We're seeing some of the pricing go over asked. And that all depends on what that sales strategy is from that listing agent and seller. But we like talking about things like this because we want to help set not only buyer expectations, but as well as seller expectations, Dion. So if you're a seller, you're going to have some competition. If you're a buyer, there might be some options and some opportunities for you, right?
Yeah, and I mean, that same buyer who missed out last week, Gary, she actually purchased this week.
Excellent.
So it just goes to show that, missing out on one property as a buyer doesn't mean that there's not another property that could potentially suit your needs. And yeah, as you're seeing there, it looks like every day that passes, there's more choice for the buyer coming to market. So yeah, from the buyer side, I would say, again, if you're intending to buy now, get your pre-approval now, and just see what happens in that market. Make sure that you are on that list that your realtor should be sending you daily with new to market listings, and you might be surprised with what's coming to market right now.
Yeah, exactly. And there's different ways for realtors to set that up for you. New to market or price changes and all that realignment. So make sure you are in the know and educated. When it comes to negotiations, education and knowledge is by far one of the most powerful things you can have. So make sure you're getting the right data. Okay, I want to talk about this survey.
Before we go on, just something came to mind. And this is relevant, especially to first-time home buyers. I was running some math with a client who was looking at buying either a $700,000 townhouse, okay, 750, and we ran the math, and I'm going to get the numbers a little bit off, but let's just say that the cost of that was about $2,900 a month in mortgage payment, okay. Then we looked at a duplex for $850. We're talking Durham region here. And I know that those properties are out there. And that payment was something like $3,400. The difference was that basement apartment was going to bring in at least $1,600, probably $1,800 a month. And the actual cost to the client to own that property was, after that rent was factored in, it's going to be something like $1,500 a month. for the more expensive property rather than the $2,900 a month for the cheaper property. And the thing is that, and again, as it comes to searches, what they're now specifically looking for are properties with 2 kitchens. As I know, you can set that up in your MLS searches as well, right? And so if you're a first-time buyer or any buyer, I feel like more and more of those properties with that secondary income in the basement are also coming to market, from what I'm seeing.
And that's just it. I can go both. Two strategies with that, Dion, is, and we've talked about this many times in the past over our videos, that mortgage helper is tremendous in situations like this. And if you're a seller or you're an owner of this type of property, you're going to stand out in the crowd. You should not be the one that's sitting on the market for months and months and months. That, we always say as to sellers, how are you going to stand out in the crowd? What can we do? What can we do to stand out? And that is, my friends, one way to do it. Have something that many other properties don't have, right?
Yes.
Okay. I love it. And we should probably spend some more time on that on another video. The financial investment of what that looks like for both the seller and the buyer, or the owner and the buyer, because mortgage helpers, we've said it many times in the past, we've helped many people purchase a home based on that mortgage helper or that income. All right, let's talk about this CMHC survey that you sent out an email around, and some really interesting information came out of that.
Yeah, so in the final quarter of 2024, CMHC interviewed a whole bunch of Canadians about their expectations for pricing of real estate or price growth in real estate in 2025. In previous years, because of that sort of rate rampage that the Bank of Canada was on, most Canadians, when asked this question, did not feel that there was any upward lift in real estate pricing, right? They thought it was going to be flat or down. But interestingly, right now, Canadians feel like that price will increase in the year 2025. The numbers they came out with was a 4.8% increase nationally, and specifically for Ontario, they were looking at 4.6%, so a little bit lower than the national expectation. And I actually ran some numbers on a potential purchase price of $750,000. Okay, so if this survey results come out to be true by the end of the year, a property that you could buy for $750,000 in early 2025, by the end of 25, that 750 property would have increased in value by $34,500, making that purchase price up from 750 to 784,500. Okay, and so a lot of people, what they see there is they go, well, if I wait, then okay, I might end up paying an extra 34,500 for that property. And they say, you know what, I can wait. That's something I can live with. But what a lot of people forget about, Gary, is for that person who chooses to buy that property earlier in the year, not only are they not paying the higher price, but that gain in value now belongs to their net worth. So by acting earlier, their net worth increases by that 34,500. So if this survey turns out to be true by the end of the year, and you don't take action to purchase early, it means that not only are you paying an extra 34,500, but you're losing 34,500 in growth, which equals effectively like a $69,000 cost by not making that purchase. Right now, I can't see the future. You can't see the future. But if this is what Canadians are feeling, then you know what? It's probably worth listening to.
Yeah, yeah, and it's CMHC is always, I want to say, very conservative on the information they put out, and is data driven. Right? They have the data to provide information like this, and CMHC, that website, in fact, you could spend hours going through it. I remember, Dion, when we bought our first investment properties, we used the data from CMHC to help with the pricing on the properties that, on the offer that we finally came to, and what am I trying to say? The final number that we agreed upon was based on CMHC information on the rental rates and the vacancy rates and all the alike. So if you need information like that, I'm telling you, my friends, CMHC is a great resource for that type of data-driven information. And action, action, the thought of doing something is only great if there's action behind it, right? And that's exactly what this, what we're kind of saying here around the CMHC report is, hey, if your neighbors and everybody else is feeling like the market potentially is going to, move in the right direction this year, don't get left behind.
Yeah, exactly. And Gary, while we're on the topic of CMHC, it reminds me just in the last week, I've also used one of their new guidelines, which wasn't available last year. And the scenario here is we have a woman who's separating from her husband, and she's clearly technically not a first-time homebuyer. But by the definition of CMHC in terms of qualifying, she is treated like a first-time homebuyer, which means she can now put down minimal, say 5% down, and still get access to 30-year amortization. Okay, so just understand that when people separate, of course, income in the household drops. So the ability to qualify by yourself is very hard. I think CMHC's sort of applied some reason, which is great here, some logic, and said, okay, well, these guys were homeowners. They're probably going to make good on their payment. Let's allow them to get back into the real estate market by treating them as if they were, younger first-time home buyers. And so because of that, the numbers work for her on a $600,000 purchase, when if we were forced into a 25-year amortization, she wouldn't be able to buy. So that's another example of one of these recent guidelines actually coming into effect and positively impacting a buyer.
And there you have it. You agree or disagree on all the policies that Canada and the Canadian financial banking and everybody else in making Canadian housing more affordable. Well, here's one way. At least it's a step in that right direction where it has made it more affordable for that buyer. I don't think we can ask for a lot more than that, as long as we're making those steps forward. That's a great example of a policy that's at least moving in the right direction for more affordability.
Exactly.
That's good.
Yep.
That's great. All right, Dion. Lots of crazy stuff going on, and I know when we get off and hit stop on the record, there's going to be more news that we got to dive into and all sorts of stuff. My friends, make sure you are staying in the know. Dion and I will host our monthly calls, our weekly calls like this, and get connected with those local experts, Dion, myself, and reach out to us. And if we're not that local expert for you, we'll make sure we get you connected to the right person. Trust me on that one. Dion, how do people get a hold of you?
Yeah, kangamortgage.ca or Instagram at Dion Beg.
There you have it. That's Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.